Hi, this is Tim Santoni, and welcome to Santoni Spotlight. Today, Darren Gallaway joins us. Darren, thanks so much for coming on the show. We appreciate it. Before we get started, maybe give our viewers a little bit of background on yourself, your professional career, and kind of what led you to this point, so they have some context for the conversation.
Sure. Orange County native. Grew up, went to Servite High School, all boys Catholic. Played football at USC. And after USC, I said, I'm going to get into, I want to get into finance. I want to get into banking or insurance. And I looked around at different jobs, and I found an insurance carrier that would send me back east, spend 6 months, and kind of submerge me in that space. I was in the disability space, learned about disability and how to sell that. Got out here to California, and I was a wholesaler in that space, and found out very quickly that we're in the life insurance business, and disability is not the main product. It's life insurance, and two, you better find your own product. So. Your own clients, I should say. So, got into that space, kind of lived it for the last 25 years. My partner and I formed the business in 2003, and what changed our business and changed our career was the whole advent of the life settlement business. So it kind of taught us how to issue and implement life insurance in a more institutional way, look at it like a corporation would, and just try to be professional. A lot of our competitors either have one brokerage account or one carrier core relationship, or they're selling concepts versus really focusing on the asset.
Interesting. So, in that space, I think there's a lot of misinformation that goes around about insurance. What are the top one or two things that people typically are misinformed about when it comes to insurance?
Yeah, I think a lot of our clients think that life insurance is just life insurance. You either need it or you don't. And I think the big thing is you can go into the bond market, you can buy bonds, and a great deal versus a very poor deal might be 50 basis points. In the life insurance space, you can go into a certain carrier, get no coverage, or you can get a phenomenal deal. And a lot of clients that go to one carrier, a broker that only carries one business card, will only get that carrier. That carrier may offer economics that are fair, but a lot of times you can improve those. And these families have different hurdle rates with their different assets and their business, and where they decide to put money is very contingent on what type of hurdle rate and IRR they have. And if life insurance can be acquired at a hurdle rate that makes sense for the family, then it should be done or not. So it's not a matter of do I need it? It's all the same. There really is a vast spectrum of quality and goodness in terms of making sense to have on a family's books.
Sure. So when you're working in a situation like that with a business owner or a family, what are the other kind of partners and people involved in influencers that are kind of in their ear, in the business owner's ear, the client's ear about what makes sense and what doesn't, and sharing with the information?
My partner and I have a joke that we would never want to sell insurance to somebody who would take our advice on the accounting or legal side. So we're always looking to partner with CPAs or accountants or investment people. Many times we'll deal with the actual insured high net worth client, but a lot of times we're just dealing with their advisors. And many times we shine there because there are so many agents that know how to sell and know how to market, but they don't necessarily know the economics, and we take pride in really understanding that asset. So for us, having those partners involved is huge for us.
Awesome. So would you say that that's kind of a differentiator in terms of the expertise and the level of service and knowledge that you guys bring to the client?
Yeah, I think we bring an institutional approach, both in terms of the different carriers that we'll talk to, the way we'll evaluate somebody's health or the corporation in terms of a guarantee issue. But we'll go out to many carriers. We're not tied to any one carrier. We also have a proprietary, we're known as an M financial firm. So four guys in the 70s with the last name of M formed a reinsurance company, and they had this theory that if we sell to healthy, wealthy people, either in the corporate space or the high net worth space, that we're going to have longer mortality or better mortality, longer life. We're going to have better persistency. The business will stay on the books longer, and create better economics. That proved true since the 70s, and we have a reinsurance company. We took that reinsurance company pricing, and we'll take it to carriers like Pacific Life or John Hancock or Prudential, and we'll get proprietary products that are based on our experience over the last 30 plus years. And that gives us a big institutional advantage.
That's great. So maybe give our viewers a sense of a recent client success story, obviously protecting the names and so forth,
Sure.
But maybe a creative application where you were brought involved, or an interesting story where maybe people are not even aware where someone like yourself and your team could be of value.
Sure. We had a recent purchase. A family wanted $100 million of coverage. And at that level, it gets very difficult in terms of the different insurance carriers are involved, the different reinsurance. So it's very important not to just go out to one carrier, ask for as much as they can go and get to the next, because a lot of times you have carriers that have reinsurance relationships with the same reinsurance companies, not people that issue carriers directly. So if you go out to one carrier, it wraps up a bunch of reinsurance, but it's a standard offer. They're looking at the medicals not as favorably as the other carrier. But if we went there first and then tied all that reinsurance together, we'd have gotten better pricing. So it was very important, and he was replacing some coverage as well. So we wanted to replace that $20 million he had, put in the new $100 million, but we had to do it in a way that made sense both from a pricing perspective and from a capacity perspective, because at that point you start to max out the market.
Sure. That's a great example. And what are some things that typically you find when you're assessing policies and looking at clients' portfolio of assets? What are some typical things that come up that are red flags that you see common?
Yeah, I'd say that probably 80% of the issued products that we see out there are poor. And I think part of that is kind of some of the issues I alluded to earlier, is that a lot of times your local agent, maybe your brother-in-law, your golf buddy, and there's a very strong relationship, a very close relationship. And a lot of times they'll talk about things that are very subjective. Don't you want to protect your family, or put things in the right, set money aside, et cetera, et cetera. And there's all this feel good, there's all this planning, and there might be 9 or 10 meetings on some of those things, a relationship-based conversation. And on the 10th meeting, the insurance is placed. And the insurance, again, may have very good economics, but 9 times out of 10, if you're not grinding that asset and really looking to acquire it on a favorable basis, what's put in place is usually bad. And that's where we shine. That's all we do is issue contracts and take an institutional approach.
So in that example where you have the friend, the buddy, the neighbor that's
Right.
not necessarily the expert, what are some creative ways that you're able to get in there and shed some light without,
For sure,
joining
yeah.
the relationship?
And you got to be careful. And sometimes, especially wealthy people will say, there's an embarrassment factor. This coverage is there. A lot of times we'll have advisors that will show us deals. We'll try to evaluate that. But a lot of times people are like, that's my buddy. I'm embarrassed. I don't want to look at this. But when we can get into our best clients are people that have had a prior experience with life insurance agents and purchase, because most agents have a bad reputation for the right reasons, and when we can come in behind the wake of a bad operator, especially when it's a significant purchase. Somebody buying term insurance for a 30-year-old with a couple kids, that's a much different than a high net worth individual buying a second to die policy.
Sure. That's a great point. So, Darren, before we let you go, ask you a couple of personal things. When you're not
Sure.
Working, where do you like to spend some of your free time?
Well, I have 2 daughters, as you know, and I'm still on my first wife, and we're happily married and all those good things. So my oldest daughter is a senior at Santa Margarita High School and does song, and it's fun to watch that. And I think she still loves me, I'm pretty sure. My freshman is playing volleyball, so it's fun to watch that. I do CrossFit up the road here, and I like having dinner with friends and wife and family, so all those good things.
Awesome.
Yeah.
Well, we'll link up all of Darren's contact information with his individual information, company information, the show notes below. If you have any questions for myself or for Darren, leave them in below, and we'll be sure to get back to you. Darren, thanks so much for coming on the show.
Yeah, thanks, Tim, for having me. Appreciate it.